All right, welcome. It is Tuesday, April the 7th, 2020. The time is 1 o'clock, and I'd like to call the order of the North Canton Board of Control meeting. I will call the roll. Member Fox.
Here.
Member Wilder.
Here.
Member Diorio is here, and Member Alabeck. It should be noted that Member Alabeck is joining us via a teleconference connection, and we can see her from laptop on display in this conference room. So the first item on the agenda is approval of the minutes. And the first packet is November 13th, 2018. Are there any additions or corrections? If not, I would entertain a motion to approve the minutes as presented.
Motion to approve as presented.
Moved by Member Fox, seconded by Member Diorio. We'll do a voice vote. All those in favor signify by saying aye.
Aye.
All opposed? All abstentions? Wilder and Alabeck abstain. Motion carries. Next item is the review of the minutes from February 25th, 2020. Are there any additions or corrections? Hearing none, the chair would entertain a motion to approve the minutes as presented.
Move to approve as presented.
By Member Fox, seconded by Member Alabeck. All those in favor signify by saying aye.
Aye.
Opposed? The ayes have it. I'm going to rearrange the agenda to allow for the next item to be the Portage Street Northwest Resurfacing Project. Given that this subject matter will probably be less in duration than the remaining item, I wanted to allow Robert Graham, who's our city engineer, who is in attendance at this meeting, to address this and then be able to report back for duty. So look at that on your agenda, Portage Street Northwest Resurfacing Project. Mr. Graham, could you enlighten us?
Yes, sir. Thank you, Mr. Diorio. We opened bids just last Friday, April 3rd, out on the portico. After 28 years, my first ever outdoor bid opening. We had 5 plan holders and 3 submitted bids. A little history, this project is 80% funded with federal dollars, 20% our own, and we have applied for municipal road funding to the county commissioners. The engineer's cost estimate prepared by our consultant was roughly $666,500. I had in the 2020 budget from last fall $637,000. Leading up to the bid opening, we had the 3 bids submitted. In my mind, the lowest and best bid was submitted by Superior Paving and Materials Inc. at a price of $453,918.25. Engineering would recommend that the Board of Control conditionally award this project in the amount of $453,918.25 to Superior Paving to complete it. And the loan condition is with our federal funding. This project has a ODOT DBE, or Disadvantaged Business Enterprise goal, of 7%. Superior submitted today their DBE affirmation submittal to ODOT, showing how they would meet that goal. They would actually meet it with 12%, but we're waiting for ODOT to just literally approve that. I don't see that being a problem, but just in case ODOT and the contractor can't come to an agreement, we would have to go to our number 2 bidder, which would be $459,000, as you see on your bid tab. But I feel comfortable that they'll have that agreement very shortly. So that was my recommendation to BOC go ahead and award to Superior with that one condition, that the DBE affirmation is approved. via that.
I would make that motion for board of control to approve. What we did,
On the condition that an acceptable DBE utilization plan is approved.
I'll second that.
It's been moved and seconded. We'll do a roll call vote. Member Alabeck? Member Wilder?
Yes.
Member Fox?
Yes.
Member Diorio votes yes. Thank you, Rob.
Okay. Thank you, Rob. Thank you.
Okay, the remaining item on our agenda is the property liability, general liability, and automobile insurance package with the city. So I think in your bid packet, we put in a copy of the bid tab from the opening, which occurred on March 18th at 11:15 a.m. Now, with insurance, it is often the case that more than what is reflected on the bottom line is important to evaluate. And what I'm referring to are the coverage forms. You know, it's one thing for an insurance company to tell you this is how much your premium is, but what are you getting for that premium? What insurance coverages are you getting? And in the commercial insurance market, there are differences in the different types of coverage forms. And so this is a discussion that should have been had, in my opinion, 5 years ago, when the city switched from its then carrier to the carrier that we have now, which is the Public Entity Pools of Ohio USI Insurance Group. Because 5 years ago, we made a very different change as it relates to our insurance. So what we had then was insurance on what is most commonly called an occurrence form. And with this form, any loss that occurs during the policy term is provided defense and indemnity regardless of when the loss becomes known to the insured, as long as reporting requirements are met. So for instance, we have an occurrence-based form, and just to make the conversation easy, let's say it's during calendar year 2019. A claim occurs in June of 2019. And it is promptly reported. The carrier at that time would be on the hook for the administration and settlement of that claim, no matter how long it took, even if it took years later. Because we followed the proper reporting requirement, we turned it in, and it occurred during the policy period. Even if it takes years to settle, they're obligated to pay. Even if we were to switch carriers and go with someone else, that original carrier that had the policy in 2019 would still be on the hook to pay and administrate that claim. That's an occurrence-based form. It's the most common, and it's the best.
I think that's what a layperson would think of in like their automobile insurance type of claim.
That is exactly what you have with your auto insurance at your home, your homeowner's insurance at your home. Now, let's say that with the occurrence form that Company A is on an occurrence form for 2019, and an incident occurs, but the city isn't notified of that until January of 2020. If we reported it immediately as soon as we heard it and determined that it occurred during the policy period, even though that policy period's over, even though that insurance pay, generally with this type of insurance, the premiums are going to be more than something if you scale it back. What would be the next type of coverage form that you would potentially scale back? The claims made form. The claims made form provides protection for losses that have both occurred and have been reported or made during the policy term. So they occurred and were made, the claim was made, during the policy term. This form of insurance will provide defense and indemnity for losses that have been reported during the policy term, even if the settlement activities and judgment of such loss continue after expiration of the policy. Losses that have occurred during the policy term that have not been reported to the insurance prior to expiration will not be honored.
So we had, let's go on one that occurred. We had Main Street Festival. There was an elderly woman that slipped where some wires came across, and they had put down some things to prevent someone from tripping, and a person simply caught their foot because it was a little uneven. An elderly person fell. But under this, if that person did not report that claim, or we didn't notice it and report that claim, and they waited until later, perhaps someone encouraged them to file a claim, and it's after this reporting period, because they didn't tell us, perhaps we wouldn't have noticed it, then that claim would not be covered.
That is correct.
Okay.
So claims-made policies normally will offer a limited extension of time at expiration, commonly referred to as tail coverage, to protect the insured from losses that may have occurred but that are unknown to the insured at expiration, thus not reported to the insurer. It should be noted that tail coverage is limited in term, normally to 2 years after expiration.
Is that free?
That is not free. So, we have occurrence form, which is the best, most commonly used, and you can see why it's the most commonly used. The claims made form, which reduces the exposure to the insurance company, and consequently may carry a lesser premium, because there is an element of risk to the insured, in this case the city, that if something happens that we didn't know about it, and we leave that policy, they may not cover that. All right.
So if I may, just so I have it right in my head, if you're going with this this occurrence type of claims made, beg pardon, claims
Okay,
made,
going with the
claims
form.
made, that if you don't have tail coverage, then you're assuming all of the liability for claims that could be reported but were not reported during the period of your policy.
That's correct. So if you had a claims-made policy, this is what makes it difficult. If you have a claims-made policy out there, and at renewal you're looking at trying to go somewhere else, and you leave and you say, I want to go to the occurrence form. The occurrence form is only going to pick up if it occurred during that policy period. So that's why you need the tail coverage, the extended reporting period, to give you coverage for up to 2 years while you're carrying forward with a new policy on a new coverage form. And though there would be a premium for that, as an example, 2 years ago, when we last bid this out in March of 18, and I'll get to some of the more the details from then, but we did obtain a tail quotation and that was $78,000 for that. Our premium at the time for all of our insurances were in the somewhere in that vicinity. So you can see,
$200,000.
yeah, why the tail coverage is priced. One of the things I've learned from insurance is that if it's priced at practically nothing, it probably isn't really worth very much. But if they've priced it kind of high, and this is high, this is just for this instance of things that we don't know being reported, we're almost paying what we would have paid anyway. All right, so there's occurrence, there's claims made, and there's a third. The third is what we have now. We have a claims paid form. Under this form, only claims that both occur and are paid during the policy term are addressed by the carrier. I use the word paid. Our previous form was made. So it had, under the claims made form, it had to occur and the claim be made in the policy period. Even though settlement might occur afterwards, it would still be handled because it was reported and occurred under that premium. Under this one, it says that the claim must occur and that it must be paid during the policy term. Losses that have occurred during the policy term but that have not been paid in full by expiration will not be further addressed by the carrier. This includes losses that may have been reported and defense initiated during the policy term. Defense initiated, but not during the policy term. Any losses occurring during the policy term that are not yet paid in full at expiration become the sole responsibility of the insured. In addition, any losses that have occurred during the policy term that the insured is unaware of at renewal that initiate against the insured at a later date are also the sole responsibility of the insured. Now, what I've been doing, and as we go back and we look at some of these other things that I'm going to bring forward, I'm not just relying on my experience with insurance and understanding what we're doing. We've had, I've reached out to and asked for some analysis of what I just read to you that was provided to me from Jackson Deacon Associates in Cleveland, and Kelly McKeon is the manager there of their public entities program. He's got 33 years in the business, and we've been asked explain the difference in as short, concise as possible. What's the differences between occurrence, claims made, claims paid? Now, if we refer to our policy or the exact language, effective, I'm reading from Article 12, members' withdrawal, cancellation, or termination. Effective 12:01 a.m. on the date of withdrawal, payments for all claims and claim expenses shall thereafter become the sole responsibility of the withdrawing member without regard to whether a claim occurred or was reported prior to the withdrawal of the member's participation in the pool.
So, claims paid.
Claims paid.
And thinking of what if near that period of time there may be litigation. Having this claims paid type of policy, I think, really ramps up for the city the need to perhaps settle a claim where it might be something that we'd rather go to trial, but there's certainly not 100%, but even if it was, we felt very strongly that we would be successful at trial, we're gambling on not only winning, but if we lose, we assume 100% if it goes over the date that this policy would lapse. May compel us to settle a claim.
It may cause us to take an adverse action
Yes.
on a pending claim. And I think, you can begin to understand with this process that if we're in this type of policy, help me understand and justify going through a competitive bidding process every year when, in fact, if we have such an open claim, we addressed this issue. We did have a claim that was appealed from a lower court ruling that we had been victorious. And at the time we were putting this out, that was an open claim. So to get in a position where you're not gambling and taking undue risk in making a change from one carrier to another, trying to leave a claims paid form to go to an occurrence form, what we would need is another type of insurance coverage called prior acts. So you heard about tail coverage. We explained what that was. That gives you an extended reporting period after the policy expires to report new claims. Prior acts coverage endorsement is a type of coverage form that goes back and overlays on top of your previous insurance policy, back to a pre-agreed date, as if this coverage was in effect at the time. It only covers those prior acts that may be open or have not been settled at that time. So the insurance companies, when they price this kind of coverage out, they ask for a loss run to see what open claims you have, what type of open claims they are, who might be the participants in an open claim, and that makes a determination on whether they'll even offer such a thing. Yes, sir.
Do we have anything open at this time?
We do not have anything open at this time.
And are we looking
Yeah,
at a termination date with our current carrier?
Our current policy expires on April 15th of this year.
And from your explanation, it sounds that the occurrence form of coverage should be the direction.
I have believed for a long period of time that if we could get into an occurrence coverage form, it's the best policy for the city. It offers the best type of coverage for a situation where an organization as small as ours, where there could be changeover of personnel,
That's where he's going to go.
would allow potential claims to fall into a gap where they weren't reported, and therefore we would be on our own. With the occurrence-based form, it gives us a little bit more, in my opinion, the protection that if the administrator changes, the finance director changes, or just staff changes as a department head and a claim doesn't get reported up to scale, that the occurrence form would be our best protection. There's no protection against not being diligent and careful with what you're doing with insurance, but to the extent that there would be some type of accidental slippage, it's less likely to occur under an occurrence form.
The current policy that ends now, there's no penalty for us that we're leaving that carrier or anything like that.
Well, there is I'll answer that question now,
Okay.
because otherwise I might forget.
Okay.
Come back to it. and I don't want to do that. So under this particular type of pool that we have right now, perhaps a simple way to understand it is that there's a portion of our premium that is excess premium that's put into a pot, and that accumulates each year that we remain in the pool. And each year that we remain in the pool, there's more of it, so that it could be used for various things. What would be one various thing it could be used for? One would be, it could be used for buying tail coverage for leaving that plan, a new one.
Okay.
But that's not what we would be seeking here if we were to, depending on what you guys decide on this recommendation. But in all honesty, whatever that dollar amount has accumulated to at this time would most likely be forfeited. But I don't think that in the grand scheme of things, when we weigh out all the pros and cons of these different coverage forms and whatnot, I think that it's a forfeiture that I think is, a cost of doing business.
Well, I thought we had to get it out there.
Yeah. No,
And I appreciate your forthcoming with that. So the current policy we have now sounded like it was a 2-year?
2 years.
2 years. And if we have the opportunity to go forward with your possible recommendation, what would the coverage period be for an occurrence form of coverage?
Well, you can get, you can have it, it's based on what our bid packet put together. You can quote it for 1 year,
Okay.
2 years, 3 years, whatever you think the marketplace is. I think last year, the last time through, I'd asked for a 2-year policy.
Mhm.
The previous time it was a 3-year policy.
Okay.
There's no set advantage or disadvantage. It's not like if we lock it up for 3 years, we can get a price discount or something like that.
Well, we have insurance for a reason,
Yeah.
and I understand.
Patrick,
Yes.
the bids that are on the bid sheet, are those 3 same coverage type policies, or is the current one rebidding as a claims paid and the other 2 are bidding a different, either occurrence-based or claims made? And are they 1-year or 2-year bid amounts?
Thank you. The question is regarding the 3 bids that we've received. The USI Insurance PEP bid is using the coverage form that they have. That's all that they're allowed to use. That is by their membership in the pool. They're the only public entity pool in Ohio, to my understanding, that use this particular coverage form. There's another public entity pool in Ohio called the Ohio Plan, and I believe that the city of Louisville is under that plan. That is not a claims paid form. The Fidelity Group is representing a bid through the Travelers Insurance Company, and that is all on an occurrence-based form. And the Assured Partners is using U.S. Specialty Insurance, and they are using all occurrence-based forms as well.
And they are 1-year or 2-year
Those are
bid?
1-year policy premiums, that's correct.
Thank you.
All right, so I want to read to you from 2 years ago. We had hired a consultant through the Huntington, Pat Corcoran, who guided us through our bid process and assembling the bid packet and putting that out and answering questions on applications that insurance companies might send in to try to figure out how much to quote and what are the risks. So I want to read to you what he had written last year. Leaving the public entities pool can be a very difficult and expensive thing to do if not done properly. PEP's intergovernmental agreement provides that if a member leaves, the member becomes responsible for all open liability claims, as well as any future claims that would be made against the entity for the time period that the entity belonged to the pool. Not knowing what kind of exit plans the city might need, this is from 2018, we provided some options to consider. Prior acts coverage. The Ohio plan, this is from Whitaker Myers Insurance Agency from 2 years ago. The Ohio plan has the ability to treat the period that an entity belongs to the PEP as though their policy is written on a claims-made basis. The Ohio plan can offer prior acts coverage on a claims-made form to new members leaving the PEP rather than purchasing the extended reporting coverage from the PEP. And that was estimated at last year at 2 years ago at 78,000. 2 years ago, our consultant came to the same conclusion that to leave the plan an extended reporting period, quote, is not the best course of action. The best course of action would be to obtain prior acts coverage. We had a quote for prior acts coverage at that time, and ultimately, the sole reason we did not change 2 years ago was because the additional premium that would have been required to make the move was not budgeted. And the finance director at the time believed that I had just become the administrator at the time, but while this was being assembled and put together, I was the deputy director of administration, and the finance director had only been here a couple months before me. So everybody was kind of new on the job and trying to figure things out, and it just didn't gel and come together. The purpose of what I was trying to show was that this was an issue 5 years ago when we made the move. 3 years later, the consultant comes in, makes the same recommendation that the Ohio plan with prior acts coverage could make it possible for you to leave. At that time, or now 2 years later, the Ohio plan chose not to bid on it, as many others through this process chose not to bid. Why? Because again, if you're unable to leave because there's an open claim, and you're unwilling to take that risk or unwilling to pay the additional amount to provide coverage to leave, why should I go through all the effort to ask the city all these questions to underwrite this, to come up with a premium when ultimately they're not going to leave? So if our goal is that at some point down the road, we would like to see more people bidding on this, more entities coming to bear, it would behoove us to have the type of coverage that would make it easy for us to make a switch should we do so. So in addition to the coverage forms, there are the other basic coverage limits as far as how much will we pay out if there's an automobile liability claim. How much will we pay out if there's a general liability claim? Those numbers are the same as our current coverage, which have been the same as the current coverage before. Our property coverage limits have increased over time. We've added buildings, increased the amounts. Our current policy, as amended, was provided to the other bidders at the time to quote off of that. So we don't really have to look at one has 5 million in liability, the other has 4 million. They all got the same limits of liability. So we're really talking about what should be the really important things. When will they pay? When will they not pay? Under what circumstances? What risk is that to the city in an environment where personnel could possibly change? What gives us the best opportunity to bid out in the future? And I think that would be with the with an occurrence-based form policy and obtaining prior acts coverage. So the bids that were presented on March 18th, as you have in your packet, one of those entities through Assured Partners provided a quotation for prior acts coverage. They actually gave 2 quotes for prior acts coverage. And 2 quotes depended upon how far back you wanted to go with coverage. So the one that is put in your packet there is $31,887, and that represents going back 5 years on the general liability. 1 year, I believe, on the auto, and 5 years. Give me a second here. Five years general liability, 5 years law enforcement liability, 1 year auto liability. A shorter option was 1 year general liability, 1 year auto, 5 year law enforcement. So,
Are we talking pennies?
no, the 1 year GL, 1 year auto, 5 year law enforcement was $24,265. But 5 years on the general liability, 1 year auto, 5 year law enforcement. You're basically only picking up 4 years difference on the general liability. Is $31,887. So it's a difference of approximately $7,000. But importantly, the 5 years on both the general and the law enforcement would go back to the time in which we had left our previous occurrence-based form and went to the public entity pool. So it would go all the way back to that beginning time. As far as the ratings on the carriers, U.S. Specialty Insurance Company, they're A double plus superior rating with a financial size category of 15. That far exceeds the requirement that we have in the bid specs. And likewise, the Fidelity Group with using Travelers, the same situation. Strength of carrier and A double plus ratings are the kind of thing that we would look for if we were moving to a different carrier. In addition, the umbrella policy that is being offered through U.S. Specialty has a we'll call it a provisional provision for coverage to apply in a broader sense of the term. It's a good thing. So it would just warrant a quick discussion on umbrella insurance policy. So typically, the umbrella insurance policy acts like an umbrella over top of your underlying coverage limits. So your umbrella policy will stipulate a minimum amount that they need as underlying coverage. So if the umbrella is supposed to be, say, a $5 million umbrella policy, and the coverage underlying on the auto, is minimum required is $3 million. What you would expect that is your underlying automobile insurance carrier and limit would pay up to the $3 million, and then the umbrella would fit down from the first penny above $3 million and give you $5 million of additional coverage on that. So in the traditional umbrella, all your coverage limits are underneath there. So if you have a, let's say a high-speed pursuit with law enforcement that ends in a fatality and large property damage, you could have a claim that on the wrongful death exhausts the underlying limit of $3 million and starts tapping into the umbrella. But you also have property damage claim that could get exhausted and need to reach into that same umbrella. The umbrella just provides that $5 million over all those particular lines. In a very bad situation, typically involving law enforcement or EMS or fire, where there's a wrongful death kind of thing, you could find yourself in a situation where your underlying limits are exhausted and you're putting your umbrella limits at risk because all there is $5 million. That's the typical coverage policy. Under this umbrella, the umbrella acts as a separate limit over and above every single line of liability. So if we have our underlying limit of, whatever the number is, 1 million, 2 million, 3 million on the auto, then there's a $5 million umbrella above it. If under the property damage, there is $1 million liability limit, now there's the umbrella above that. Each one acts as a silo above every coverage liability limit. So that actually gives us a lot of additional protection in the event of a really bad calamity. I make that different as a point out of the coverage difference forms. So when we look at Travelers' price, which is being represented by the Fidelity Group, their bid was $119,004. And if we look back 2 years ago, Travelers bid also, but they used a different agency or brokerage. Their premium was $119,926. So you can see, just trying to provide some idea that where we're at, that I think pretty much everybody knows prior acts coverage. So then we would be back to an extended reporting period and having to get that coverage from the PEP. That premium would be a lot more, and it wouldn't be as good as the prior acts coverage. The prior acts coverage would be a one-time charge for this policy, so we wouldn't have to be dealing with this in the future. So it would be my recommendation that, I should say before that, when we did the budget for 2020, we did build in some additional funding to cover getting some type of insurance to bridge this gap. And in reviewing that with the Director of Finance a couple weeks back, and again, Director of Finance is new to this city, certainly not to the position, but we were able to locate that we believe that we budgeted approximately $25,000 in addition to be able to help with this, not knowing how much it would be. So it would be my recommendation that the city obtain occurrence form-based coverage policy, that the city obtain a prior acts coverage, that through the differences that we've learned in the meaning of the coverage terms and some of the other benefits of coverage through one of the carriers, that the city move towards and award this contract for the insurance to the group represented through Assured Partners, at $111,458 with an additional coverage policy for prior acts of $31,887, making the total $143,345, and that this would represent the lowest and best insurance bid for the city. We will open it up to discussion. Although you all were participating as we went, so.
Do you need a motion to accept that and then go into the discussion?
Well,
Okay.
yeah, make sure that everybody had a chance to weigh in. If there's anything else, we'll look to the law director first if we feel that anything else that we need to address. And I know it's a lot to process, so just kind of
I'll start by thanking you for the due diligence involved with this, that as any lay person in insurance, they have a belief of how their policy operates, and perhaps many occasions it's the trust from the person that sold their policy. Because many people don't sit down and read a policy. It's pretty complicated perhaps to understand, and so I think most people rely on the representation of that person that wished to sell them the policy. Well, this is how it works, this is what's covered, and you simply rely on the verbal part. Okay, that's what I'll need, and perhaps that's what they pay for. Here, you dug into these called terms of art, that in that business, the occurrence base, and terms to understand what that means. There's, I think, always the thought that an accident or claim that's made while you're insured would remain for a reasonable period of time, that if you went to another insurance agency, you wouldn't think your new insurance agent would cover. Of course, they didn't represent you, but your former one with the claim that did not have been reported, that a layperson would believe, well, I'm covered. I had insurance during that time. I had this policy, now I've switched, so I have to let the other one know, and to find out that you're not covered because there was a claim that wasn't presented to you. You weren't aware of it. I think that that's significant in dispelling that belief. People, I think the ones here may go back and look at some of their own policies for their own insurance, but a significant factor for me is that the importance of this bridge policy, and that only one of the three submitted a quote.
And that's a great point. And we did not ask for it in the quote. And the reason that I didn't is that I didn't feel that it was up to the city to determine what the best course of action forward was. We would evaluate what was being presented, but leave it to the experts in the field to come up with a solution on how this could be resolved. And one, in fact, has done that very thing. Member Allebeck?
I appreciate the conversation. I know we have been talking about this since January when I arrived, and I do recall the budget adjustment that was made for the bridge insurance policy and understand that this is a good time, not having any known claims, to make this change, to go back to an occurrence-based policy. And I agree that the 5-year would be the best choice, especially now knowing that that takes us back to our last occurrence-based policy that covers anything that would maybe come up in between. So if you need a motion, I'm willing to make that motion to move forward with your recommendation.
There's a motion. Is there a
Okay, I'll second that then.
All right, before we vote, we'll make one last ask. Member Wilder?
I just want to echo again what Gina just spoke of. And again, I appreciate your research on this. And you have the funding that you've researched for this. But most of all, I think it's a new look at our risk management for our city, for property, liability, and automobile. And I would concur with going forward. And if you need a second to that motion, I would second that motion to go with, is it assured?
With the, yes, with the insurance package presented by Assured Partners.
Assured Partners.
So for the record, it was moved by Member Alabat, we'll say seconded by Member Wilder, and we'll do a roll call vote, and we'll start with Member Wilder.
Yes, I approve.
Member Fox?
Yes.
Member Alabat?
Yes.
Member DiOrio votes yes. Thank you all. There being nothing else on the agenda for this meeting, I would entertain a motion to adjourn.
Motion?
So moved.
Moved and seconded. All those in favor signify by saying aye. Aye. Opposed?
Aye.
We are adjourned.